Hello folks, this is Goldstein, President of Personal Financial Strategies with our October 2014 Economic Update. In this month's video, we will be discussing some of the economic events that occurred last month and the impact to you as an investor. Please stay tuned at the end for a required disclosure statement. October was a jittery month for the financial markets, although the U.S. economy continues to perform quite well. Despite slowing growth in Europe and Asia, most signs point to accelerating economic growth here in the U.S. Let's take a look at what happened last month. Investors got their first look at third quarter economic growth and found that gross domestic product, also known as GDP, grew at a whopping 3.5% for the 3-month period ending September 30th, 2014, beating economists' expectations by a wide margin. Although GDP did decelerate from its 4.6% pace in the second quarter, it was the fourth quarter out of the last 5 that the economy has grown more than 3.5% on an annualized basis. Let's keep in mind that this is only the first GDP growth estimate, and it will definitely see revisions. Higher or lower, we won't know until more reports come in. However, at least one major player felt good enough about economic growth to make some major policy changes. The Federal Reserve announced the end of its groundbreaking quantitative easing programs, meaning that after October, the Fed will no longer purchase new bonds to support the economy. This means that the Fed feels good enough about the economy to take off the training wheels. They will, however, hang on to the approximate $4.5 trillion in bonds for a while longer in case the economy needs a bit more help. Digging a little bit deeper into the news, analysts are reading a hawkish tone to the Fed's announcement, which means that there's a risk of rising interest rates sooner rather than later. Because the Fed feels optimistic about the country's economic outlook, some analysts think that rate hikes might come as early as spring 2015. Either way, we're confident that the Fed will look closely at all the data before making any significant decisions. Consumers are also feeling great about their economic prospects. Consumer confidence surged in October to the highest level we've seen since 2007. Overall, Americans are feeling much better about their job prospects and their ability to qualify for better jobs and raises. This is great news for consumer spending and the economy going into the upcoming holiday shopping season. Third quarter earnings season kicked off in October, and now more than half of S&P 500 companies have reported in, so we now have a pretty good idea of how companies did last quarter. Overall, earnings are quite decent, but reports indicate that U.S. companies continue to do basically well. For the 287 companies that we know about at the current time, total earnings are up 6.5% from the same period last year. Even better, revenue is up 5.1% as compared to a fourth quarter average of 3.5%. That means that demand is coming back and U.S. firms can hopefully look forward to better revenue pictures in the coming months. Now, looking ahead, investors will be looking carefully at earnings data and growth prospects for the rest of the year. Although third quarter earnings are looking decent, analysts are now looking ahead and looking for guidance about fourth quarter earnings and outcomes. Though the domestic growth picture continues to be rosy, many firms are worrying about how slow global growth will affect their sales. With the recent strength of the U.S. dollar against foreign currencies, it's possible that exports will fall as they continue to become more expensive to foreign buyers. As always, we'll keep you informed as we come across more information and data that's important. That's it for the October 2014 Educational Economic Update. Once again, this is Les Goldstein, President and Founder of Personal Financial Strategies Incorporated, signing off for now. If you have any questions about what you heard in this update, or if you need our assistance relative to your own personal financial planning, please feel free to call us. We can always be reached at 847-268-3670. We'd be happy to talk to you. And now for our required disclosure that we always read at the close of these monthly updates. While we believe the information contained herein is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult with your financial professional, hopefully us, before making any investment decision. Thank you, and enjoy the upcoming Thanksgiving season.